How did I do today? Yeah, I'm watching the match. I've got it on in the background, 3-0. How did I do today, Tanks? I'm currently 20k up, and I've got 6k in unrealized. Well, I say it looks like I'm doing a 20k day on Facebook alone today. I thought I'd come on and stream whilst I'm smashing Facebook or smashing Meta. I thought I'd come on and do a stream for the call, see if I can get do the call. I mean, it's down after hours. It went up to $142. It's now $114. So just to put that into perspective, that in itself is it's almost a $30 swing. Yes, certainly, Tank. Ask away. Bobcat Watts. Where were you based, Bobcat? Well, 20 minutes left of the match, but it's over. It's 3-0, so that's done. I thought with the Bobcat you might be. So ask away. What do you need to know about the PDT? Okay, if you're using Schwab as your platform and you've got 3 round okay, so what about it? 3 round trips with 4,000 in trades. It doesn't matter how much you've got in trades in terms of the equity value. If you're talking about PDT, what it means is round trip, intraday trades. So you open and close on the same day. That's what it is. And if you've got less than $25,000 of equity in your account, you're only allowed to do that 4 times in any consecutive 5-day period. So the trades can be worth $400. They could be worth $40,000, but you're only allowed 4 of them if your starting equity position on each of those days is less than $25,000. If you're starting with a $20,000 account and you trade it up to $26,000 on your 3rd trade, after that it doesn't matter. But if you're starting with a $10,000 account and on your fourth trade, you're still less than $25,000, you won't be able to close your fifth trade. So you'll be able to open a position, but you won't be able to close it the same day. They will force you to hold it overnight. And if during the out of hours session you lose money, then they will liquidate your position. Do I short more? I tend to be long biased, but I'm shorting Meta at the moment. I'll be shorting Meta all day today. So my first trade with Meta, my first position I took with Meta would have been 12:45 market time, and I've been shorting it since. That was I've only shorted Meta today. I've not been long on it, and I'm just holding 500 shares at the moment. How to short Meta? So basically, you sell before you buy. So Meta is Facebook, Kinga. Do I plan on shorting? I'm currently in a short trade right now. I'm limited. I'm limited on my options with the short trade. What I mean by that is that I started with an equity position just under a little over $60,000 equity position today. So I'm only get 2x overnight margin. So I can only trade $120,000 worth of stock. I've got a buying power of $120,000. So if I'm shorting Meta, the most I can take is about 1,000 shares at the moment. No, that's not it. I'm selling shares. I'm borrowing shares from my broker. I'm selling them at a higher price, and then I'm buying them back at a lower price to give back to my broker. That's how the best analogy I could do is, okay, you and me are buddies, and you've got last year's iPhone, and I see that there's the new iPhone coming out, and I see that you've got last year's iPhone. I know that the price of the iPhone, that particular model, is going to be a lot lower when the new iPhone comes out, but you're not using it. So I say, can I borrow your phone? You give it to me. So I'll give it you back at the end of the week, and I'll go and sell it for $500, and then at the end of the week, I go on when the new iPhone comes out. That price it falls down, and I buy it on the open market, buy a replacement on the open market for $200, and I give you that back. I keep the $300 for myself. So that's essentially shorting in a nutshell. So you're buying high and selling low. Sorry, selling high and buying low. So there's. So if you look at this, I've sold 500 shares. My average, because I've been averaging down, but my average position was I sold at $127. So I can buy back now $113 and pocket the difference, and I effectively pocket $7,000. Am I obligated to buy 100 shares at a group? I'm not sure what you mean by that question. Am I obligated to buy those shares once I've sold them? Yeah, absolutely. So otherwise, you can get liquidated. Your broker will liquidate your position if you reach a point where you have no equity to cover the losses, potential losses. Oh no, you can buy 15 shares. You can buy 15 shares. You can buy, well, if you bought 10 shares right now, it costs you one share is $113. I'm using DAS Trader Pro. So DAS Trader is the software. So this up here is DAS Trader, as is the positions there. I'm just going to adjust the position so we can actually see the Benzinga scanners as well. So I needed a day like today to get back on track. I really did. Funny enough, I just did a trade update before the close, and or 7,500 up, largely down to shorting Meta. Now the actual call is not, it doesn't start for another 20 minutes, so we could see a further sell-off yet. What about the broker? The number of different brokers depends on where you base. I'm currently using Capital Markets. Exactly, Kinga. That's exactly right. So you borrow 10 shares at $120. You're effectively selling 10 shares at $120, and then Meta goes down in price to 110. And you buy those shares back to give that, effectively you're borrowing them from your broker, you buy them shares, you give them back to your broker, and you pocket the difference. Actually looking for the Meta earnings call, but that's coming out in 20 minutes. I want to be able to stream it live, but we'll see. I'll just stick the Benzinga feed on, I think. Should be able to put that on for... How are we doing on YouTube? We've got... You okay there, guys? It's exactly the same as buying put options. Because put is basically going short with a contract. Yes, I do. I do teach beginners, yes. And there is no theta burn. That's it, because you're actually trading the underlying asset. You're not trading a contract. How long have I been in the Meta trade for? So I took this just after it popped up. So I've been trading it short all day since lunchtime. And then after hours, it popped up to over 140, and that's when I took my position. And I've been trading it down since. So I've been taking profits down there since. So, and that's why I've only got 500 shares in, because then I can add 500 shares and take it off, therefore, you know, averaging my cost down and locking in some gains. So right now I could add 500 and sell 500, and I'd basically take lock in half the profits and move my stock down from move my average cost down from 127 to whatever 118 or whatever it is, 120. Where am I on the month? Well, this will put me, what, let's say I get another 5k, it's 25k. That'll put me about 60. Actually, I've got my my things open right here, haven't I? So I can detailed for the month. Yeah, that'll put me about 67,000 up on the month. So all's not lost. I don't think we're going to get to the 100k goal, but that'll take me past the 7 figures for the year. Can you use unsettled cash immediately with this type of day trading? Yes, you can, Kinga. If you've got a margin, that's one of the advantages of trading in a margin account is you get instant settlement, and you can use it straight away. Whereas if you're in a cash account, you've got the trade plus two, T plus 2 rule. So you basically have to wait 2 days for it to settle. You can trade with your equity today, and then at the end of the day, you're looking for settlement, and you can't trade with the same equity tomorrow. You have to wait another day. So, but so what I'm going to do right now is I'm going to add to this position and then cover. So just effectively lock it in another 3,500. There you go. So I've locked in another 3,500, and I've averaged my cost down now. My average cost is $120.87. So and that's what I've been doing all the way down is just adding, taking off. So I'm averaging down, keeping my position size pretty constant, but averaging down, and I'm moving it, just locking in the gains. No worries, Kinga. Look, there's no. If you've got a strategy that's options and it's profitable, don't fix what's not broken. You know, and you can use some of these same strategies on options. You can be a bit more complex with options trading, of course, and trading equities you can be quite lazy, and I like it that way. So I would like this to drop below the $100. If we can drop another $10, that would be absolutely phenomenal. Hey, Tata. Cheers, Les. Top 3, maybe. I've not been having, to be fair, I've not been having a good month. I've not been having a good October. I've not been having a bad October. A bad October would have been like, you know, losing money. I've not been having a good October. I've been finding it tough. I've not been having really good, you know, I've not been averaging the 5K daily, and I've just been finding trading tough. But that's more down to the market conditions. To be fair, I'm not used to trading in bear market conditions like this. It's all relatively new to me, but I'm still using the same strategies I use in bull market conditions. And I'm looking at, when I'm going for the breakouts, I'm looking for the continuation, and when it's not there, I'm getting frustrated. So if you can make money in a bear market, you can absolutely crush it in a bull market. That's all I'm saying. Well, exactly. So that's $7 it's dropped in the time that we've been chatting. I've had 500 shares, so that's what, $3,500. I mean, it's dropped. The high was 142.60. It went up to. So I was over what, about 3,500 up on Meta before the close, and now I'm over 20,000 up on Meta, and I'm counting. Now I've got a little bit of a bit of a hangman here, which is usually a bullish sign. Well, I say bullish sign, but it's a sign of reversal to the upside. So I'm just keeping an eye on it. I'm not worried. I'll hold this now. If I have to hold this to break even, I'll cover at break even. I'm not too worried about this now. 120. What if it gets to kind of 112? We're under 113 now. So if it gets to 112, I'll cover and lock in some more. But this went up to over 142. So this has dropped $30 already. What am I trading, Sanjil? I'm trading Facebook. Meta platforms, as they like to be called today. It doesn't stop them being crap, but I'm shorting Facebook. Or Meta. Yeah, exactly, Kinga, and that's when I got in, was just after noon. So 12 my first short position was 12.50. What? No. 12.51. No, 12.46. Hang on a minute. 12.45. I first took a short position at 12.45 in the afternoon Eastern time. I'm self-taught, yeah, Yeezy. Yay. We're into stoppage time at the end of the 3 goals, so good to see Harvey Elliott on the score sheet again in Europe. Top young talent, that lad. Good prospect. No, I'm not. Unfortunately, I'm not. Not for the month. After this, I'll be about 67. Well, I've got 24 locked in. I've got 4 unrealized. Let's just say I take a 1,000 of that. So I've 42,000 before today. Like I say, it's been tough this month, Teddy. We still have 3 trading days left. Thursday, Friday, Monday. So if we can have 3 days like today, then the 100K will be no problem. But look, that's not unlikely to happen. Not say it's not going to happen. Say it's unlikely to happen. I mean, I have just back in July, I think it was, the Aeroclean, we got $60,000 trade. Nice, Kinga. That's lovely. Good to hear. I love hearing when other people are making money on the markets as well. It's like it's free money. Yeah, so I'll be about 67,000 after today, which puts me back on target. Well, actually, that will put me over goal for the year. Just let me have a quick look. I've got my trader view open here. I can tell you exactly where I am. Yeah, so I was 975,600. So I needed 24, just over 24K, 24,400 to get over that 7-figure number for the year to date. I'm on 24,100 plus whatever's unrealized. So if I'm gonna, I need $300 out of this to get me over, to get me on track pro rata for the year. No, you just need a decent broker. The problem is with the UK is there's not a lot of brokers that will allow you to trade by yourself. They will trade for you, but there's not a huge amount of, you're limited. Interactive brokers, you need, if you're going to be day trading, you need 25K because they implement the PDT rule. 212 is, there's a waiting list as long as your arm. Trade Zero is not the greatest. It's you know, zero commissions. eToro, don't touch it. AvaTrade, you can use them, but MetaTrader is a horrible platform for day trading. So you're limited on what you. There's a whole bunch of brokers out there, but a lot of them are just a waste of space. So yeah, I should do that today. I should finish today. Growth numbers, by the way. So my target is to have a 7-figure net number by the end of the year. So at the end of December, I need to. Well, I'd like to have it covered before the end of December because I want to take the last week or two off in December. I've got someone I need to go and see. So right now, getting a little bit of. Tata, take a look in the description. There's all the links that I would recommend are in the description of this video, brother. So there's the first link in the description is the course that I teach on how to trade. The second link is in the description is the scanners and an alert system that I use, which is Benzinga. You can see that here, and then. Meta Platforms investors run from Q3 earnings. Revenue beat, EPS miss. Daily users up, cost set to climb in 2023. So it's still selling off, but we've still not had the call yet. The call is scheduled for 5 p.m. today. So Mr. Zuckerberg might be on that call, and you know, the technological equivalent to Xanax. This is printing money. $111 incoming. There you go. We just broke 112. So. Spurs have just had a winning goal in the 8.5-minute chalked off for offside. He's way offside. That's right. Well, and counting, over 20k on the Meta. I've been shorting it since just after lunchtime. I'm mainly long. I'm mainly long. I'm a long bias trader, but I just couldn't resist going short on Meta today. It's easy money today. It's testing 112 again. I'm just holding this now. I will be getting out before the close, which is in a couple of minutes. So I'm getting out now anyway. I'm covering now anyway. I don't really want to hold this overnight, and I can't trade beyond this. So I'm just going to get out now and call it a day. Okay. Well, I've got a couple of minutes left. I've just got a warning there. Hey, Tamimi. The question is, should I hold this overnight or not? Let me know. I'm not sure I want to hold this overnight though. That's the thing, because I'm not sure. I think it might bounce overnight depending on this call, and I can't trade after 5. on with this broker. So I've got 2 minutes left to get out of this trade, or I'm holding it overnight. So yeah, I'm just going to cover. I'll give it till 1 minute 2, and then I'm just going to cover. I mean, it's been a bloody good day already. I mean, it's what, 20. If I cover now, yeah, I'm just going to cover now actually, because it's starting to kind of turn around. So just going to cover now, and 28k day. Back at it, Tony. We're back. So 28k. That takes us up to 70k on the month. Oh, if we had three 10k days, we could hit goal for the month. I'm not saying that's going to happen, but what a fantastic day. So yeah, well, I'm going to stick around for the actual call, but there we go. That's Meta. Earnings can do that. Let's mute the football. Let's see if I can get a stream set up for Meta. I've got starting shortly, so I'll keep that. Well, there, Tamimi. What I'll do is this music is from the Meta stream, so that will be starting in a few minutes. So I'm glad I got out. Let's see. Here we go, Meta presentation. It was only 500 shares as well, but if it gained $20, I could have been.
Good afternoon. My name is Martin, and I will be your conference operator today. At this time, I would like to welcome everyone to the Meta third quarter earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you'd like to ask a question, please press the 1 then the number 4 on your telephone keypad. This call will be recorded. Thank you very much. Ms. Deborah Crawford, Meta's Vice President of Investor Relations, you may begin.
Yes, I do, Andy.
And welcome to Meta Platforms' third quarter 2022 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg,
I might set automated stops during the open market, but more often than not, it's all manual trading there,
are also on
Andy.
the call and will join Mark and Dave for the Q&A portion. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's
110. It's below 111 now.
report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we may present both GAAP and non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The press release and an accompanying presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
Hey everyone, thanks for joining today. Our community continued to grow this quarter. We now reach more than 3.7 billion people monthly across our family of apps.
You've got to love it when Zuckerberg gets one in the eye, don't you?
Dynamics of volatile macroeconomy, increasing competition, ad signal loss, and growing costs from our long-term investments. I have to say that our product trends look better from what I see than some of the commentary I've seen suggests. There's been a bunch of speculation about engagement on our apps, and what we're seeing is more positive. On Facebook specifically, the number of people using the service each day is the highest it's ever been, nearly 2 billion, and engagement trends are strong. Instagram has more than 2 billion monthly actives. WhatsApp has more than 2 billion daily actives, also with the exciting trend that North America is now our fastest growing region. Across the family, some apps may be saturated in some countries or some demographics, but
still selling.
Overall, our apps continue to grow from a large base. We're also seeing engagement grow, especially strong growth in Reels, and I'll share more details about that when I discuss our product priorities shortly. In terms of our business, total revenue grew slightly this quarter on a constant currency basis. We're still behind where I think we should be, but we believe that we will return to healthier revenue growth trends next year. That said, it's not clear that the economy
It's not doing a good job, Andy, is he?
We're planning our budget somewhat more conservatively. In 2023, we're going to focus our investments on a small number of high-priority growth areas. So that means that some teams will grow meaningfully, but most other teams will stay flat or shrink over the next year. In aggregate, we expect to end 2023 as either roughly the same size or even a slightly smaller organization than we are today. Three of the primary areas we're going to focus on are our AI discovery engine that's powering Reels and other recommendation experiences.
Elon's given the bird to Zuckerberg.
Our future vision for the metaverse. The internal indications I've seen suggest we're doing leading work and are on the right track with these investments. So I think that we should keep investing heavily in these areas. As I've shared before, our goal is to grow Family of Apps operating income such that even with our AI infrastructure and Reality Labs investments, we can still meaningfully grow our overall company operating income in the long term. Our current surge in CapEx is largely due to building out our AI infrastructure, and we would expect CapEx to come down as a % of revenue over the long term. We expect Reality Labs expenses will increase meaningfully again in 2023, with the biggest drivers of that being the launch of the next generation of our consumer Quest headset, and hiring that has been done in 2022, but for which we're going to be paying the first full year of salaries next year. More broadly, beyond 2023, we expect to pace Reality Labs' investment to ensure that we can achieve our goal of growing overall company operating income. Our capital allocation philosophy over the long term is to allocate a portion of the profits generated from the family of apps towards these future-focused areas, while enabling greater return of capital to shareholders. All right, now I'd like to share some updates on the progress that we're seeing in
It does seem like it's trying not to cry, doesn't it?
Discovery Engine is playing an increasingly important role across our products, especially
Hey, Alfred.
as advances enable us to recommend more interesting content from across our networks and feeds that used to be primarily driven just by.
No, I had to cut my
follow.
I had to cut my trade. I was shorting Meta, but I had to cut the trade because he was either cut the trade or hold overnight. I'm only allowed to trade up until 5 p.m.
Across Facebook and Instagram each day. That's a 50% increase from 6 months ago. Reels is incremental to time spent on our apps.
But it is a good it's a good day.
We believe that
Maybe I
we're
should
gaining
put
time to share on competitors like
so
TikTok.
add the source here. So
I expect a few things to set our products apart here. First is that our Discovery Engine work allows us to recommend all types of content beyond Reels as well, including photos, text, links, communities, short and long form videos, and more. Second is that we can mix this content alongside posts from your family and friends, which can't be generated by AI alone. And third, as more social interactions move to messaging, we're developing a flywheel between discovery and messaging that are going to make these apps stronger. On Instagram alone, people already reshare Reels 1 billion times a day through DMs. Moving to monetization.
why is he talking about Reels? I mean, is he saying like our TikTok clone?
Since
A
Reels
lot of
doesn't
rubbish.
monetize at the rate of feed or stories yet.
See you later, Alfred.
That as Reels grows, we're displacing revenue.
Exactly. Shouldn't have mentioned him Reels because it's getting crushed by TikTok.
Clearly the right thing to do, so that way Reels can grow with the demand that we're seeing. But closing this gap is also a high priority. Even with the progress we've made, we're still choosing to take a more than $500 million quarterly revenue headwind with this shift, but we expect to get to a more neutral place over the next 12 to 18 months. I mentioned last quarter that Instagram Reels had crossed a $1 billion annual revenue run rate. We continue scaling monetization across both Instagram and Facebook, and the combined run rate across these apps is now $3 billion. Beyond Reels, messaging is another major monetization opportunity. Billions of people and millions of businesses use WhatsApp and Messenger every day, and we're confident that we can connect them in ways that create valuable experiences. We started with click-to-messaging ads, which lets businesses run ads on Facebook and Instagram that start a thread on Messenger, WhatsApp, or Instagram Direct, so they can communicate with customers directly. And this is one of our fastest-growing ads products, with a $9 billion annual run rate. And this revenue is mostly on click-to-messenger today, since we started there first, but click-to-WhatsApp just passed a $1.5 billion run rate and growing more than 80% year over year. Paid messaging is another opportunity that we're starting to tap into, and it continues to grow quickly, but from a smaller base. We're putting the foundation in place now to scale this, with key partnerships like Salesforce, which lets all businesses on their platform use WhatsApp as the main messaging service to answer customer questions, send updates, and sell directly in chat. And we also launched GeoMart on WhatsApp in India, and it's our first end-to-end shopping experience that shows the potential for chat-based commerce through messaging. So between click-to-messaging and paid messaging, I'm confident that this is going to be a big opportunity. The last area that I want to discuss today is the metaverse. We just had our Next conference and announced Quest Pro, which we just started shipping. It's our new high-end VR headset that delivers high-resolution mixed reality, so you can blend virtual objects into the physical environment around you. It's pretty amazing when you see it, and it's going to enable all kinds of new experiences and socializing, gaming, fitness, and work. And I'm really
augmented reality, virtual reality, metaverse. It's the 3D TVs of the current age.
Big theme for Quest Pro.
It's a gimmick
There
that's not going to
are
last.
1 million people who get new PCs every year, mostly for work. And our goal for the Quest Pro line over the next several years is to enable more and more of these people to get their work done.
This is Zuckerberg, Les.
Reality,
This is himself.
potentially even better than they could on PCs. And to deliver a great work and productivity experience, I'm excited about the partnerships that we announced with Microsoft bringing their suite of productivity and enterprise management services to Quest, Adobe and Autodesk bringing their
$30 down.
Zoom bringing their communication platform, Accenture building solutions for enterprises, and more. There's still a long road ahead to build the next computing platform, but we are clearly doing leading work here. This is a massive undertaking, and it's often going to take a few versions of each product before they become mainstream. But I think that our work here is going to be of historic importance and create the foundation for an entirely new way that we will interact with each other and blend technology into our lives, as well as the foundation for the long term of our business. So between the AI discovery engine, our ads and business messaging platforms, and our future vision for the metaverse, those are 3 of the areas that we're focused on. I believe that the tougher prioritization, discipline, and efficiency that we're driving across the organization
It's great to sell off even more.
the current environment and emerge an even stronger company. As always, I'm grateful to everyone at Meta for your hard work, and to all of you for being on this journey with us. And with that, I'm going to turn it over to Dave.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis.
Oh, it's going to sell off now.
Q3 total revenue was $27.7 billion, down 4% or up 2% on a constant currency basis.
There you go.
Had foreign
The
exchange
word
rates
down
been
is the direction the stock price is
total
going.
revenue would have been approximately $1.8 billion higher. Q3 total expenses were $22.1 billion, up 19% compared to last year. This includes a $413 million impairment of certain operating leases as part of our ongoing work to align our office facilities footprint with our anticipated operating needs. In terms of the specific line items, cost of revenue decreased 1% as a reduction in Reality Labs hardware costs was offset by growth in infrastructure and content-related expenses. R&D increased 45%, mainly driven by hiring within our Family of Apps and Reality Labs segments, as well as Reality Labs technology development costs. Lastly, marketing and sales and G&A increased 6% and 15% respectively, mainly driven by headcount-related costs. Our pace of hiring slowed in the third quarter, consistent with our previously stated plans. We added 3,700 net new hires.
It's absolutely great day for me. Not so good for Zuckerberg and his cronies, but that's good for me.
A seasonally stronger hiring period. We expect hiring to slow dramatically going forward and to hold headcount roughly flat next year relative to current levels, which I will cover in my outlook section. Third quarter operating income was $5.7 billion, representing a 20% operating margin. Our tax rate was 21%. Net income was $4.4 billion, or $1.64 per share. Capital expenditures, including principal payments on finance leases, were $9.5 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $173 million. We repurchased $6.5 billion of our Class A common stock in the third quarter and completed an inaugural debt offering of $10 billion. We ended the quarter with $41.8 billion in cash and marketable securities. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow. We estimate that approximately 2.9 billion people used at least one of our Family of Apps on a daily basis in September, and that approximately 3.7 billion people used at least one on a monthly basis. Facebook continues to grow globally and engagement remains strong. Facebook daily active users were 1.98 billion, up 3% or 54 million compared to last year. DAUs represented approximately 67% of the 2.96 billion monthly active users in September. MAUs grew 48 million or 2% compared to last year. Q3 total Family of Apps revenue was $27.4 billion, down 4%. Q3 Family of Apps ad revenue was $27.2 billion, down 4%, but up 3% on a constant currency basis. Consistent with our expectations, the headwind to year-over-year growth from Apple's ATT changes diminished
Okay, below.
as we lapped the first full quarter post the launch of iOS 14.5. However, this was offset by weak advertising demand, which we believe continues to be impacted by the uncertain and volatile macroeconomic landscape. As a result, our Q3 constant currency growth rate was in line with our Q2 rate. The healthcare and travel verticals were the largest positive contributors to growth in Q3. However, this was offset by continued softness in other verticals, including online commerce, gaming, financial services, and CPG. On an advertiser size basis, revenue growth from large advertisers remains challenged, while we've seen more resilience among smaller advertisers. Foreign currency was a significant headwind to advertising revenue growth in all international regions. On a user geography basis, year-over-year ad revenue growth was strongest in Asia Pacific and rest of world at 6% and 3% respectively, with both regions continuing to benefit meaningfully from strong growth in click-to-messaging ads. North America and Europe declined 3% and 16% respectively. In Q3, the total number of
No, this was not the smaller count, no.
increased 17%, and the average price per ad decreased 18%. Impression growth was driven by Asia Pacific and rest of world. The year-over-year decline in pricing was primarily driven by strong impression growth, especially from lower monetizing surfaces and regions, foreign currency depreciation, and lower
It's actually shrinking up.
Quarter on quarter was $192 million, up 9%, driven by
year-over-year
messaging growth from our WhatsApp business platform, partially offset by a decline in other line items. We continue to direct the majority of our investments towards...
Doesn't help that WhatsApp was offline this last couple of days.
In Q3, Family of Apps expenses were $18.1 billion, representing 82% of our overall expenses. FOA expenses grew 18%, driven mostly by employee-related costs, infrastructure-related costs, and the impairment of certain operating leases for office facilities that we plan to exit. Family of Apps operating income was $9.3 billion, representing a 34% operating margin. Within our Reality Labs segment, Q3 revenue was $285 million, down 49% due to lower Quest 2 sales. Reality Labs expenses were $4 billion, up 24%, due primarily to employee-related costs and technology development expenses. Reality Labs operating loss was $3.7 billion. Turning now to the outlook. We expect fourth quarter total revenue to be in the range of $30 to $32.5 billion. Our guidance assumes foreign currency will be an approximately 7% headwind to year-over-year total revenue growth in the fourth quarter based on current exchange rates. Before turning to the expense outlook, I wanted to provide some context on the approach we are taking towards setting our 2023 budget. We are making significant changes across the board to operate more efficiently. We are holding some teams flat in terms of headcount, shrinking others, and investing headcount growth only in our highest priorities. As a result, we expect headcount at the end of 2023 will be approximately in line with third quarter 2022 levels. We've increased scrutiny on all areas of operating expenses. However, these moves follow a substantial investment cycle, so they will take time to play out in terms of our overall expense trajectory. Some steps, like the ongoing rationalization
109 incoming,
will lead to incremental costs in the near term. This should set us up well for future years when we expect to return to higher rates of revenue growth. Turning now to the specific expense outlook for 22 and 23. We expect 2022 total expenses to be in the range of $85–87 billion, updated from our prior outlook of $85–88 billion. This
there you go.
Estimated
Under 110 now.
In additional charges in Q4 related to consolidating our office facilities footprint that we expect to record in the fourth quarter of 2022. We anticipate our full year 2023 total expenses will be
Hemorrhaging.
$96 to $101 billion. This includes an estimated $2 billion in charges related to consolidating our office facilities footprint. We expect the slight majority of our 2023 expense dollar growth
I should have held overnight. I should have held.
Growth coming from cost of revenue. We expect the percentage growth rate of 2023 operating expenses to decelerate meaningfully as we curtail non-headcount related expense growth and keep 2023 headcount roughly flat at current levels. Conversely, our growth in cost of revenue is expected to accelerate, driven by infrastructure-related expenses and, to a lesser extent, Reality Labs hardware costs, driven by the launch of our next generation of our Consumer Quest headset later next year. Reality Labs expenses are included in our total expense guidance. We do anticipate that Reality Labs operating losses in 2023 will grow significantly year over year. Beyond 2023, we expect to pace Reality Labs investments such that we can achieve our goal of growing overall company operating income in the long run. Before turning to our CapEx outlook, I'd like to provide some context on our infrastructure investment approach. We are currently going through an investment cycle which is being driven
I've been hemorrhaging for months.
First, we are significantly expanding our AI capacity. These investments are driving substantially all of our capital expenditure growth in 2023. There's some increased capital intensity that comes with moving more of our infrastructure to AI. It requires more expensive servers and networking equipment, and we are building new data centers specifically equipped to support next-generation AI hardware. We expect these investments to provide us a technology.
This stock was over $350 a share at the start of the year.
Reels and ads. We are carefully evaluating the return we achieve from these investments, which will inform the scale of our AI investment beyond 2023. Second, we are making ongoing investments in our data center footprint. In recent years, we have stepped up our investment in bringing more data center capacity online, and that work is ongoing in 2023. We believe the additional data center capacity will provide us greater flexibility with the types of servers we purchase and allow us to use them for longer, which we expect to generate greater cost efficiencies over time. These investments, along with revenue headwinds, are contributing to higher capital expenditures as a percentage of revenue in 2022 and 2023 than we expect over the long term. Turning now to the specific CapEx outlook for 22 and 23. We expect 2022 capital expenditures, including principal payments on finance leases, to be in the range of $32 to $33 billion, updated from our prior range of $30 to $34 billion. For 2023, we expect capital expenditures to be in the range of $34 to $39 billion, driven by our investments in data center, servers, and network infrastructure. An increase in AI capacity is driving substantially all of our capital expenditure growth in 2023. Turning to tax. Absent any changes to U.S. tax law, we expect our fourth quarter 2022 and our full year 2023 tax rate to be similar to the third quarter 2022 rate. In addition, as noted on previous calls, we continue to monitor developments regarding the viability of transatlantic data transfers and their potential impact on our European operations. In closing, we are pleased with the growth of the community using our family of apps and the engagement and improvements we are deriving with efforts such as Reels and our AI-powered content recommendations. While we are facing near-term headwinds on revenue, the fundamentals are there for a return to stronger top-line growth. We are approaching 2023 with a focus on efficiency and spending discipline, and I'm optimistic that these moves will set us up well to achieve our goal of driving operating income growth over the long term while investing for future growth. On a personal note, I'll be closing out a decade at Meta in the next couple of weeks, including the last 8 years as CFO. In my new role, I'm looking forward to continuing to help the company achieve its long-term mission and execute on its financial plan. I couldn't be happier to hand off the CFO role to Susan Li, who is one of the most talented executives that I've had a chance to work with in my long career in finance and tech. And with that, Martin, let me open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, press 1 followed by the number 4 on your touch-tone phone. Please pick up your handset before asking.
I've got a question.
Clarity.
Why is your share price almost under, a little over $100 a share when it was $350 at the start of the year?
Thanks for taking my questions. If I could squeeze in two. The first one is on CapEx and return on invested capital. The CapEx spend and forward expectations are remaining somewhat higher than investors expected. So
earnings per share is shocking there. Look at 164.
AI investments are going to enable you to do differently going forward than in the past? And what's a reasonable period in which investors expect to see material incremental engagement or revenue from these? And then the second one is on engagement. I thought your comments about
it needs to go into the metaverse and have some
interesting, but maybe just
virtual reality earnings.
Big topic around time spent. Can you give us any update on what U.S. time spent trends look like, just to sort of give investors some incremental confidence in the durability of the platform in your oldest market? Thanks.
Hey, Brian, why don't I take the time spent question first, and then I'll hand it off to Susan on the CapEx question. On time spent, we are really pleased with what we're seeing on engagement, and as Mark mentioned, Reels is incremental to time spent. Specifically, in terms of aggregate time spent on Instagram
No
and
worries.
Facebook, both are up year
I think I'm going to call it a night myself. I'm not really interested in the waffle of the questions now, but we've seen the earnings. It's kind of finding a bit of support there at 109, 110. Let's see what happens overnight. I'm kind of thinking maybe I should have held my position overnight. I exited at 112. So let's see what I would have already been, another 1,500 up, another 1,500 bucks up if I'd held the position. But look, that's just a bit too risky. So look, I'm going to end the stream now, and I'm going to. It's already 10:30 p.m. here, so end the stream now. I'll be back at it. I'll be trading live in the morning, so that'll be 9:30. Well, 8 o'clock market time. 9:30 when the market opens for the first hour. 90 minutes before that for the pre-market, and that'll be 1 p.m. here in Ireland, 1 p.m. in the UK, and come join me. Come join me live tomorrow for day trading tomorrow. I look forward to seeing you all there.
So this is something that we'll be watching very closely. We think we're early in this journey, but our level of capital
and it's breaking lows. It's still breaking lows. I mean,
through these investments,
good lord,
if we generate
breaking lows.
Engagement and revenue gains, we'll continue.
But look, I'll end the stream. You can go and follow it on the tube yourself if you want to, and I will see you all tomorrow morning for pre-market. And as you can tell, I'm a lot more buoyant now because I don't feel like this month has been a waste, just based on today. We've covered. Let's have a look at this.
To kind of revenue growth in 2023. Any color you can share?
Yeah, so we've covered quite a lot of. Well, we've covered the drawdown as a whole, so we're about above the highs now. So we're about 60k up. So happy enough with that. We needed 5k today to cover the drawdown, so we've done 28k. So yeah, we're in a good place. I'm in a good frame of mind. Hopefully tomorrow we'll have another day like today, and it's been a busy day, but another day like today with some bullish momentum and maybe another stock that moves either up or down that we can take advantage of. Catch you later, guys. Enjoy the rest of your evening, and I'll see you tomorrow.
So some of it is just going to depend on the broader economy and recovery that we see. But we're continuing to make progress in a number of areas in terms of growth, and Mark cited